This is the Uptick Newswire Stock Day podcast, sponsored by InvestorsHangout.com. Subscribe to us on iTunes, Google Play, and YouTube to stay up to date on penny stock news and interviews, public information on OTC, pink sheets, and microcap stocks from around the world, with your host, Everett Jolly.
On today's show, I'm bringing you back a returning guest, and he was on my show back in June 20th. 2018, we're talking about no other than Rennova Health, Inc. They trade on the OTC markets under the ticker symbol RNVA. And before we get started, our main topic today is going to be talking about dilutions and the plans and the futures for Rennova Health. Being in this industry for 30 years as I've been, there's different dilutions. There's working dilution and there's growth dilution. To me, working capital dilution is a failure from the get-go, but growth dilution is what you want to look for to acquire assets, to acquire revenues. And I think that's what they're on to. With us today is the CEO of the company, going to explain the dilution and what's going over there and the growth of the company. We're talking about no other than Seamus Lagan. Seamus, welcome back to the show.
Everett, thank you for having me back. You've picked an interesting topic for today. It's one that a lot of our shareholders make comment on, and look forward to some discussion on these points.
You know, when you ask for people for working capital, and when I see, you know, I've been in this industry now for over 30 years, working capital, they take that and it's just for general purposes. And like they said, the definition of an insanity is doing the same thing over and over and expecting a different result. Then you got the other side of that, growth dilution. And you guys are actually buying hospitals, you're buying revenues. And so I just want you to expand on that and maybe just open the eyes to the investors out there.
I appreciate the opportunity to try and do that, and hopefully my comments will help. Look, it's the age-old explanation of, you know, a smaller percentage ownership of something that is valuable can be more personally beneficial than, you know, retaining a large percentage ownership of something that fails. From our perspective, Everett, you know, we've had no option but to raise some money. We've admitted we had a couple of difficult years. I would like to believe that, you know, the money was well utilized. We have, you know, taken a new direction with our business. We've continued to invest in our underlying software products. I think our shareholders are perhaps a little impatient with us, but you know, we will soon spin that division out, and hopefully that can you know, create some value on its own. But parallel to that, as you say, we have recently, you know, embarked on a fairly ambitious strategy in this rural hospital sector. And, you know, if we were continually taking money and not making progress, I think our investment bankers and the institutions would very quickly tire of us. I believe that the support they've shown us is in itself, you know, a confidence by them that we will succeed, that we will get this business rebuilt. And, you know, I think that we're finally starting to see numbers in the current quarters that demonstrate that that is going to happen. You know, look, I keep repeating, it's not a get-rich-quick scheme. I said it the last time on your show. It's going to take a little time, and, you know, I appreciate that small cap companies sometimes, you know, they can have big multiples or big movements in the market. We're looking at this for, you know, what can we build over the next 2, 3 to 5, 7, 10 years, and that creates a slightly different mindset than you know, what happens in the next 3 months. You know, to address your point on dilution, we have a lot of debt. We assumed a lot of debt over the last couple of years. It's well publicized, big numbers, and those debt holders, they have converted debt to equity. That has increased the number of shares very significantly. You know, if the company had another option, it would probably have taken it, but, you know, there was a lot of risk to our business over the last 2 years. The investors, look, they got their pound of flesh, but they wrote some big checks. I believe from a management perspective that we've made good use of that money. I believe that the dilution in ownership, which has affected, you know, ourselves, management, myself, other people in the company, will work out in the long run. It will benefit us to have taken that money. Over the last 18 months, I believe there is an excess of $20 million of debt that has been converted to equity. So, it's not insignificant numbers. And I believe that our continued growth in the sector, whether that be from existing operations expanding into provision of new services or additional acquisition, will at some stage allow us to access cheaper financing, Everett. And at that time, with a big reduction in debt, I believe the investors, the marketplace, will take a very different view on the valuation of our company.
So let me interject here for a second. Last time we were on the show, we talked about a run rate happening here maybe in the third or fourth quarter, getting to $2 million per month. You still feel comfortable with that run rate?
I do, Everett. We're on track with that, and we're confident enough that we actually put that number in a recent press release. We don't give guidance historically, and that's a number that we believe we will achieve even without further acquisition.
And recently you put out a press release, you hired a new CFO. Can you give us a little bit on that CFO and what does that mean to the company?
Look, I think anybody looking at the company for the last 2 years will appreciate that there's been a small resource of people, and people have worn numerous caps. That's fine for a short period of time, but we're now expanding into ownership of additional hospitals. I don't know the exact number, but I believe current employees is somewhere between 250 to 300 people. It's unrealistic to expect one person to be a CEO, a CFO, and properly perform all those roles. So, the new CFO comes from a background in these hospitals, has many years' experience in turnarounds in rural hospitals, in assisting companies grow them and sell them. And I'm not suggesting that's what we're trying to do, but I do believe that knowledge in the sector that we are growing into is a big benefit to the company. We will expand and add to that capability as we move forward. We're currently looking at additional individuals, either as consultants or to help us with particular projects in the rural hospital sector to try and understand and make good decisions about where to move forward in the future to add revenue and have a very stable business model.
My guest today is Seamus Lagan. He is the CEO and president of Rennova Health, Inc. They trade on the OTC markets. You can find them under the ticker symbol RNVA. I think they're very grossly undervalued here at 0037. In closing here, I just want to talk about your new product you guys picked up, the new 64-slice CT scanner. That sounds like a very expensive machine. What's that going to do for you guys?
Look, that rural hospital had an old machine. If it breaks down, it directly impacts your revenue. It also was not adequate to give perfect scans, if you like, or enough information to doctors who were sending patients further away to have a more intrusive scan, if you like. So that machine is going to allow us to better service the patients that come to the hospital and the patients from doctors in the surrounding area. And I think anybody in the sector recognizes that you have to provide the best possible service you can. And if you have a competitor down the street with something better, well, you can expect to lose your customer to them. So that puts us right up there. I don't believe we have anybody that can compete with us in that local area after that machine is up and running. And we look forward to that adding to the revenue.
I want to thank you for coming on the show. It's always a pleasure to have you on the show. In closing, is there anything that we didn't get a chance to touch upon you would like to illustrate to my listeners?
No, I know everybody's keen to see our second Q out. We still believe that will be out on time. We're still trying to get it out a few days early. Let's see if we can achieve that. but we do want to maintain a timely filing of our financial reports going forward. And like you said, we look forward to reporting growth here in the next couple of quarters.
Take a look at Rennova Health. Again, I think they're undervalued here at 0037. You can find them on the OTC markets under the ticker symbol RNVA. Thank you very much for your time, Mr. Lagan, and we'll talk to you real soon.
I appreciate the continued interest in the company, Everett. Thank you.
This program is entirely sponsored and produced by Uptick Newswire LLC, which is responsible for the content. The opinions and information provided on this program are those of the guests and those of the respective companies they represent, and do not necessarily reflect those of the staff or management of Uptick Newswire. Uptick Newswire encourages all listeners of this program to do their due diligence and research when determining investment strategies that will work for them, or to seek the assistance of an investment professional. The guests of this program may have paid for its distribution and are not directly affiliated with Uptick Newswire or this station.